Hey everybody, I hope you and your investments are doing well. It's been a while since we've last chatted, and oh my gosh, a lot has happened in that time period. We've got global inflation going on because of the war in Ukraine and making commodity prices go through the roof. We've got still supply issues coming out of China because they locked down for COVID. Now that's slowly reopening, and hopefully that kind of helps get the economy going back on track. We've had a provincial election in Ontario. We voted back in a conservative government, or at least I should say 18% of all eligible voters voted in a conservative government. You can tell I'm not exactly happy about that, but oh well, here we are. And Elon Musk, is he buying Twitter or is he not buying Twitter? I wish the guy would make up his mind. And of course, even just recently, just yesterday, this week, the US inflation rate month over month has gone up yet again. It's getting really expensive out there. My goodness. Personally, I'm very thankful that I have an electric car so that I haven't had to pay the pump prices, but we're seeing that at the grocery store. Our grocery bill, I swear, almost month over month, we're paying on average $100 more each time. It's hitting our investments hard too. My goodness. I've seen some of my position drop by almost like 25%. And some of the simple logic that we've all learned, like, when stocks go down, bonds go up, but because the interest rates are getting raised every time, just here in Canada, they went up to 0.5 basis points. So that's an additional 0.5% on top of what was already going up. And there's talk, again, if inflation keeps going up, it's going to happen again. So the bond prices keep dropping because inflation goes up and just you can start buying new bonds at the... Anyways, I've got a video about that if you want to check it out, where we talk about all basically the bonds and the relationship with inflation and what normally should happen. But we are in crazy times. So what should we be doing in these times? Well, what I've been doing is I've been still averaging down my cost. I've been sticking to the strategy I've been using from day one, where one week I'm picking the stocks that are kind of really low, and the other week I'm picking some of the stocks that are going high. So that way I'm trying to balance out, the stocks that are kind of on their way up and the ones that are on their way down. So far that strategy seems to be working for me. I'm not getting any further ahead. It feels like we're just treading water, but this is going to pass. It's not going to go on forever. If we're investing for the long term, we don't have to worry about this. So we can keep putting money into stocks and just keep going. Keep averaging down your stocks, your prices, and you will be fine in the long run. And of course, we just had a month end, so I want to tell you about how I did on the dividend front, because that is my main shtick. I am a dividend stock investor, so even when the prices are going down, I'm still getting paid monthly and quarterly dividend payments, which just makes this whole situation a little bit more bearable. So let's take a look at what those dividends were in the month of May, starting with Ryokan. Ryokan always comes out at the beginning of the month. It looks like the 6th or 7th day of the month. And that was for $3.49. I have not put much into Ryokan since the beginning, but I have started to put some money into that because it's kind of dropped down, not below my original buying price, but still, it's a good stock to buy. And now why not? And then DVY, so that's the Vanguard High Dividend Interest Yield Canadian stock, $13.23. Now, before things started going crazy, I put like $5,000 right into that. I sold my car, put money right into that, and that's why it's such a high yield or high dividend I'm receiving from that. Then we got Pizza. They're a dividend. They are, of course, they're a dividend. They are a monthly dividend paying stock. $4.88 there. I don't think yet I can afford a slice of pizza, but of course I'd probably want something to wash it down with yet. So I'm going to keep growing that position so that way we get more and more dividends from Pizza. And then Royal Bank of Canada. So that was a big one this month, $13.20. This is a stock where they've been recently increasing their dividends to their shareholders. So that's been nice to see. I think I purchased Royal Bank of Canada way back at the beginning. I think I've only bought one additional time into them. So it's still a nice dividend to receive from them. And then finally, topping it off is Diversified Royalty Corp, with $4.22. So this is a lot of monthly paying dividends in this one. Like, yeah, Royal Bank is the only one that pays quarterly. So, and I think that's why this month is my lowest month when I look at all the different quarters, the months. When I look at all the different months, this is always the lowest one when you look at it in a quarter. I think you know what I mean because you're smart and so am I. So that's it. Only like 5 different dividend payments in the month of May. More to be had in June. And I always like to show you guys on a monthly basis how much money I've been getting from Wealthsimple Cash Card. So far a total of $7.25. So it's been growing actually pretty significantly. Used it quite a few different times in the month of May. I did an election donation. I bought some additional masks because our family is still choosing to wear the mask when we're out in public, as well as just paying some of the monthly expenses that usually go on my credit card. I use the Wealthsimple Cash Cards. That way I'm getting 1% in stock money. Basically, it goes into my Wealthsimple Invest account, Wealthsimple Trade, I should say. And then we use the money. So it's been a great tool to kind of just get more out of the every month purchases that we do. So highly recommend it. There's a link down below. Check it out. Current promotion, I believe, is if you sign up, you get $10 and I get $10. And so that's simple, easy money if you have not already signed up to use it. Highly, highly recommend it. I think I've said that already. So that concludes this video, guys. Sorry that it's been a while since we've last chatted, but I'm going to try and create these on a more regular basis because, I'm checking in with you and I want you to check in on me, and just let's make sure that we're doing a great job at staying in this game. We're in it for the long term, and it sucks right now. It does suck to see things constantly going down, but eventually it's going to go up. So we're buying when it's low. It's going to skyrocket when it goes up. I think we are all going to be patting ourselves in the back 1 year from this day when we see like, wow, look at the growth that I had. Like it is going to just go up very, very quickly once this economy starts turning around. And, fingers crossed there's no recession, no stagflation. I don't have a crystal ball, so I can't tell you one way or another. But anyways, I'm rambling and I shouldn't do that. Like and subscribe to this video, guys. It does help me know that you're appreciating this content. I do enjoy making it for you, and let's keep at it. So stay safe, be awesome, and we'll see you in the next video. This is Steve Coleman signing off.